And joining us now for more insight on all this is B. Riley Wealth Management Chief Investment Strategist Paul Dietrich joins us in studio. And Paul, when we look at this play out, I mean, obviously the energy move today is not really surprising when you figure out how much oil prices have fallen here. But when you look broader market and the reaction, what we're seeing to coronavirus cases spreading, what's your take on how this might be different than what we've seen in the past?
Well, I've been an investment manager for over 20 years, and I've gone through the SARS crisis, I've gone through the MERS crisis, the swine flu crisis, and the Zika crisis, and I really don't see any difference. I mean, people were panicking with Zika, especially in places like Florida, because you got it with mosquitoes, and if you were pregnant, you know, you could have a deformed child. So, I mean, in many ways, that was even worse. SARS was much more deadly than this. And so I'm seeing the same sort of panic and overreaction. And I went back to all my notes from years ago, and you know, I don't see a difference. You know, every time we want to say this time it's different, it's not. And if you look at the impact on the underlying economy and each one of the sectors that are being impacted the most, it's hard to make a case that the market is reacting properly.
Now, that could definitely be true, but when you add in the oil shock that we had last night, now you create a even magnified supply shock to what was already supposed to be a supply shock and demand shock. So I guess the question now is, with the OPEC announcement yesterday, crude oil falling to where it's at $33 right now, how is it the uncertainty that's making people run for the doors, run towards fixed income, run towards gold? Is that why we're seeing the decoupling now?
I think there is, but once people start thinking about the actual economic impact of the oil cuts, I mean, this is an unbelievably great boon to the U.S. consumer. We're going to have lower oil prices. Anyone who does manufacturing and uses any kind of crude oil, which is a lot of our manufacturing, especially in the agricultural industry, this is great. It's going to cut prices. It's going to increase earnings for those companies. The fear is that the shale producers in the United States, and you got to remember that what Saudi Arabia and Russia are doing is trying to put the shale producers out of business in the U.S. because they're the ones who are increasing the world supply. We're not part of OPEC. And so they are heavily leveraged. If they start going bankrupt, which isn't going to happen right away because of the low oil prices, they can't cover their interest payments, that would be a problem for the U.S. But Saudi Arabia, they need higher oil prices, or they're going to have to cut back on their government. It's not a stable government. Russia needs it really badly. This is a game of chicken. It will be resolved with some compromise between China and Russia. And when that is resolved, I think the market will zoom back up again, and it will not, in the end, impact the U.S. economy or shale producers.
Yeah, I mean, that's the tricky part, too, when we're trying to weigh the pro-cons of this, too, because you're talking about consumers getting about, I think Morgan Stanley called it a more than $100 billion short-term boost here when we think about oil prices coming down less at the pump. The problem is, if consumers aren't actually out there spending right now because of all these fears that we saw play out with other health crises as well, when we think about people not wanting to leave the house, travel, go on vacation, what have you, if the consumer, which has been the thrust of really keeping this economy going, starts to waver, I mean, how does that play out to trickle across the board?
You know, I'm not seeing that anywhere. Last night I went to a restaurant. It was packed. I've been flying cross country all this week. All the flights were packed. Friends were going to Florida. They said, you know, they were trying to get people to go on extra flights. Mm-hmm. If you go out on the streets of New York today, it's as crowded as ever. I mean, it's going to impact, to a minimal degree, I think, it's going to impact, to a large extent, cruise ships. Yeah. But in terms of travel, you know, you looked at United Airlines, they said, you know, they're probably going to go back 10%, which is going to mean that their earnings will be the same as they were last year. Now, that's not an economic disaster, even for an industry that we think will be impacted most by this.
Yeah. And it might not be worthy of a bailout either when we're talking about all the potential stimulus measures that might be out there. But also when we're talking about really what we're seeing, everyone was talking about how this year was going to be the year where you would need to see earnings growth, right? Because we had valuations run up, partially why we saw stocks really enjoy a strong 2019. But everyone was saying this was the year you would need earnings growth. And if you're not going to get that, then you would run into some problems here. We're seeing it play out across the pond, too. The UK FTSE 100 officially entering a bear market here. The first, we'll see what happens on the close today, could potentially be happening here as well. But, I mean, if you're not getting that earnings growth, how does that?
Well, you're talking about an industry, the travel industry, that makes up less than 10% of the U.S. economy. We're not talking about all industries. You have to be really careful.
Yep.
And even the shale oil industry makes up about 5.4% of the U.S. economy. But this is what we really have to think about.
That's a very important point. And like I said, I mean, a lot of people might not have been braced for this. Not really anyone saw the cases spreading or really has the question of how long this goes on. So I think right now that's potentially why you're seeing some of the jitters play out across the pond. Now officially a bear market. We'll see what happens here. But for now, Paul Dietrich, thank you so much for joining us. Appreciate you taking the time.